Hello and welcome to another educational video. As part of our technical analysis series, we would like to look at trend lines. A trend line helps technical analysts determine where market prices are heading. A trader using technical analysis will utilize trend lines to identify and confirm market price trends. This is based on the idea that price trends. The trend line is nothing more than a straight line drawn between at least two or more points. An uptrend line has a positive slope and it's formed by connecting two or more low points. In order to have a positive slope, the second low must be higher than the first. Uptrend lines act as support and point out the net demand it's increasing as the price rises. An increasing price combined with increasing demand is very bullish and shows that buyers are determined to buy. If prices remain above the trend line, the uptrend is considered solid. A break below the uptrend line suggests that net demand has diminished and a change in trend could be looming. A downtrend line has a negative slope and is created by connecting two or more high points. The second high must be lower than the first for the line to have negative slope. To confirm that the trend line is valid, at least 3 points must be connected. Downtrend lines act as resistance and demonstrate the net supply is increasing as the price drops. A falling price combined with increasing supply is very bearish and shows that sellers are determined to sell. If prices remain below the downtrend line, the downtrend is considered solid. A break above the downtrend line indicates that net supply is falling and that a change of trend could be looming. The trend line becomes more important and more credible as the number of price extremes that can be connected by a single line increases. The validity of a line that connects only to price extreme is questionable. Most often traders can take profits too early. It is best to stay with the trend until it breaks, avoiding the desire to sell too soon because the profit could be higher than originally anticipated. Thank you for watching.
Okay, so let's begin today's webinar series on trade management, part 2 of 4, break-even and partial profit placement. So how many of you guys have actually tried or know how to put your break-even and take partial profit? Do you guys use that often, or is that something that you haven't thought about, haven't seen? Let me know if you have any questions or any comments, because I have another page that is open so I can see exactly what you guys are typing, or yeah, I can see any questions that you have. So feel free to type there and I'll answer whenever I can. Right, okay, I have some answers that says that you do not know how to use break even, or you do not take partial profit. Okay, this is a very important risk management. We can say it's risk managing as well. Okay, part of your trade management tool as well, because it's important to know where your break-even point is. Okay, partial profit placement is important as well, because you know you don't want to go through a turmoil. Imagine you are trading on a 4-hour or daily chart, right? There will always be this emotional turmoil that you go through, not knowing where your position is, you know. So placing partial profit or taking partial profit is good sometimes. Okay, so before I start the session, disclaimer again, the information in this webinar should not be considered investment advice or an investment recommendation, but instead can only be taken as educational materials only. So if you were to trade, please do your own due diligence. Okay, so this is me, your host today. I'm Annabelle. So I'm an analyst here at Everest Fortune Group, which is an award-winning research firm. Finalist for Best FX Research 2019, 2020, 2021, and finalist for Best Equity Research 2020, 2021. Okay, so I'll be bringing you guys through today's session on trade management part 2 of 4. For those who missed the part 1 of 4, you can actually go to IronFX page to check it out. So part 1 of 4, which I will touch a bit on in this session, which is the take profit and stop loss placement recap. Right. Let me grab my pen. Can I? Oops. Give me 1 second. Do I have a? Yeah, okay. Okay, I'll use blue then. Okay, so agenda for today, I'll start off with anatomy of trade for those who missed my previous session. So anatomy of trade meaning it's not just only your entry and your take profit, right? In between, before your entry, in between, during your trade, and as well as before your take profit, there is a lot of other steps that are essential and as important as your entry itself, because most of us would only focus on the entry part, right? You'll spend a lot of time, you analyze the charts to find the best entry, but we always miss out the in-betweens, which are as important, okay? So that will be covered in anatomy of trade. Then we will have the recap on take profit stop loss placement. This is in the previous session, part 1 of 4 in the trade management, which is as important. Then we'll have the break-even definition. Oh, this should be, yeah, correct. Break-even placement, break-even definition, break-even placement, partial profit placement. So this series is relatively easy to understand. I'll put it as simple and as understandable as possible. Okay. Yep. Let's move on to the next session. The next page. Oops. Oh no. Okay. So anatomy of trade. Like I've mentioned before, right? The anatomy of trade. I'm just grabbing my pen. Just give me 1 second. Okay. So for the anatomy of trade, do I have my pen? Okay, this is irritating me. Okay, I'll just use this pen. Okay. Okay, so most of us, we are always very fixated, very focused, very we put a lot of focus here on the entry because we are always looking for the best entry, right? Looking for breakouts, looking for reversals, depending on what's your style of trading. But we are always focusing a lot, like probably, I would say 60% of our efforts doing this first. Okay. Let me know in the comment section if I'm correct, whether you guys also focus a lot on the entry part. I'm pretty sure most of us focus a lot on the entry part to catch the entry first, and then we will do our risk to reward after, correct? Or we will only think about our stop loss and take profit after. These are often afterthoughts. Or personally for myself and our few of our other colleagues as well, right? These are often afterthoughts, okay? So what we mean by anatomy of trade is that all of these are as important as your entry itself. You shouldn't be just focusing all on entry, okay? There is your stop loss, your take profit placements. These are definite. You have to have it. Break even partial profit is good to know, but I would say it's not as important as your stop loss and take profit. Okay, this is just a gauge, you know, at the back of your head to know, hey, you know, am I at my break even? Am I losing money? Okay, this is a good to know. It's a good knowledge. And then partial profit is a management style where for people who do not want to go through the emotion, you know, especially with very liquid markets, you know, and very volatile markets where your movements can be extremely volatile itself. So if you do not want to go through this kind of turmoil, you can learn how to take partial profit as well as trailing stop. Trailing profit is trailing stop, okay? And then the last part will be idea invalidation. Okay, so this is part 1 of 4. This will be part 2 of 4, and then 3 and part 4 of 4. Okay, this will be covered in the rest of this session moving forward. Okay. Okay, let me move on. So let me do a brief recap on what is take profit stop loss. Okay, let me look at the comments. Sometimes my entry point, right? Okay. Okay, so take profit and stop loss. Do you guys remember how you should be putting your take profit and stop loss? Maybe I will divert the attention here instead. Okay, I will just go to a random chart. Okay, so if you guys remember my previous webinar series, maybe I use euro, okay, because I saw one that was quite nice. One will be a good example. Okay, maybe this one. This is good as well. Okay, so for example, if you have an entry right here, you feel like it will move. Okay, this is a recap, yeah. So if I have a entry here, you feel like, hey, you know, my trend is in a very bullish manner. I will look to do a buy position here. Okay, I have a buy here, and I feel like it will go up. Where should your take profit be? Should it be at A? Should it be at, okay, this is a bit messy. 1 second. Should it be at B? Or should it be maybe C? Okay, maybe here, C. A, B, or C? Where should your take profit be? Let me know in the comment section. Where should your take profit be? If you guys have tuned in, please let me know that you have absorbed what I've mentioned previously. Where should you put your take profit? Is it A, at the previous high, C, beyond, because it might potentially shoot up, or B, before the previous high? Okay, I have very good answers. All answer B. B is correct. Okay, the reason why we always put at B is take profit before your magnetic or resistance level. Okay, so this level here, let me just erase. So this level here, it will be a fight zone. Okay, given that it connects back all the way as well here. So this is a key resistance area that we will want to avoid, because a lot of fightings or a lot of commotions will be happening here. So you do not want to come to this level and go through the emotional ride. Okay. So always take profit slightly before your resistance or magnetic zones. Okay, so B is the correct answer. Very good. Let's play forward. No doubt sometimes it will touch exactly at the peak or at the very prime area, but it's preferable to take slightly before because you do not want this to happen. Imagine you are very profitable right here, right? You have a 90%. Let me erase all the drawings. Okay. So imagine you have a 90%. Your entry is here. Your buy entry is here. And then you put your take profit here exactly at the peak. This is where it happens. So imagine if just because you want to have the full 100% of take profit, when the price came here, you ignore and it fell all the way back down to probably your stop loss is here. Okay, you do not want this to happen. So always take profit slightly before. Okay. Okay. So like I've said, like I've mentioned, you always want to take profit before. Oh dear. Okay, you want to take profit before, slightly above, depending on whether you are doing a long or short position, because if you are long, you take before, correct? This is for long positions. You take before the resistance. If you are doing a short position, right, you take above. Okay, for both is considered called before, but it's depending on whether you are looking at the lower section or the upper section. Okay, so always take before for take profit, and then for stop loss, always put beyond because you need that extra buffer. Okay, in case price spikes up and come back down. So you need that extra buffer for stop loss. Okay, so remember, avoid your major resistance area because this is where all the fights will happen. Avoid it. Okay. So what is break even? So for those who do not understand or are new to break even is the point at which your trade neither makes nor loses the money. So basically it's right at where you start. Okay, so for different brokerages, sometimes they might charge you some fees for trading. Imagine you open your position here, entry, for example. Okay, you have to take into account the commission charges or all the extra charges that they have included. So maybe your break even might be slightly above. Okay, so maybe your break even is actually here. Okay, so break even point essentially is right at your entry because there is no you neither make money or lose money at the point. So it's basically you can treat it as your entry point. So that is your break even point. Okay, and the price at which you have entered during the trading position or the level at which the risk on the trade is recovered. So it's dependable on how you view it as, but essentially it's just where you have entered your trade. Okay. Okay, so break even placement. For example, so you have a buy entry here on the breakout, hoping for price to push to our take profit. Okay, so then you have a stop loss line that is here. Okay, break even is triggered here. Right, so break even is a level where you are in profit and recognize that there is a risk of reversal back to your entry. It is basically you saying if I am right, price should go all the way to my target, but if it goes back to my entry, I'm wrong and I should get out. Okay, so the break even entry is placed here. As you can see, right? It's in the yellow color or the beige color, as you can see here. Okay, this is the break even. Let me indicate it. for you guys. Yellow is break even. Okay, and then you have the green, the grayish, which is your buy entry. And then this is your TP and your stop loss. Okay. So you can see here that the person entered a trade here. Okay, the gray is the entry, right? So the price moved up, but when it came back down, I took a break-even position. Okay, before it hit my stop loss. Can you guys see? Maybe it's not the, it's a bit messy the way they put the wordings, but maybe later I will show you in a live example how break-even is placed. Okay, I think there is some slides on it. Let me just move to the next session. Okay, this might be a better example. Sorry, that one is a bit confusing because of the wordings. Okay, so here, this is your entry, right? So for break-even point, it will be at the entry, as you can see. Okay, so this is the entry. And then we have our stop loss, which is placed beyond, slightly beyond the swing low. And then we have the take profit. Okay, this is how it's portrayed here. Entry, stop loss. I'm expecting price to go up this way. Okay. Right. Okay, so you can see here, when my price is starting to move up, correct, I can place my partial profit to be here. Instead of having a full take profit, I can take some partial profit here. Okay. And or I can also move my stop loss up to my break-even point. So essentially, if my price reverse, I'm not afraid that I will lose money, correct? Because as humans, we are afraid of losing, correct? Technically. So with this profit, you do not want something like this to happen. For example, if let's say I didn't move my stop loss, right? If I didn't move my stop loss, it will look like this. Imagine price came all the way here, move up, came down, you get a heart attack, people will start to panic, but you feel like it will continue to rise, but it keeps going down to your entry. You will want to fight it back. You wait again and wait, and you hit your stop loss. Okay. Usually some of the times, okay, we might not have the discipline, to do proper risk management or proper stop loss take profit positions. Okay, but having an idea on your break even or partial profit taking is good to have this idea. Okay, to start with these ideas, because maybe sometimes you can actually try to move your stop loss above or take partial profit. Okay, if you haven't done so, this session is to give you that idea. Okay, that partial profit and break even points actually exist, and it might not be that bad of a risk management tool. Correct. If you try it, maybe it works. Instead of having to be stopped out, okay, you are at a break even. Okay, some of us might be greedy, and then we want to trade the work. All of us, when we enter a position, we always want to trade the work, but it's not always the case. Okay, so having the break even tool or knowledge is good, because sometimes you can move it up to your move it up so that you won't lose your winnings, or you won't get tapped out, okay, per se. So if I move my stop loss above, see, if it comes back down, I would not lose any sum of money. Okay. Or if I have taken a partial profit there, I would feel better that, you know, hey, luckily I have taken some profits here instead of being so greedy. So it's also dependable on what the market information is telling you, correct? Because sometimes I know we have done a lot of analysis here, blah, blah, blah. We always like, you know, think that our trade is always correct, but you have to also take into consideration what the market is telling you, okay? So when your market is telling you other information, you have to analyze on the spot and make some changes to your take profit, stop loss, break even, and maybe you can take partial profit as well, okay? Okay, so partial profit placement is exactly this. Let me bring you guys to the charts. Okay, might be easier to understand right here. Okay, if you have any questions, feel free to ask me in the section. I'll try my best to answer. Okay, so for example, let us go to, yeah, okay, we'll stick to euro then. Okay, so for example, if I'm going to take a entry here, maybe here, I will take an entry here. Okay, I'll take an entry right here. Yep, where the previous swing low is. Can you guys tell me your watch? Oh, okay. Okay, can you guys tell me where would you actually, or where is the break even point? Is it at A, at B, or at C? Where is the break even point? Let me move this up. Where's the break even point? Okay, I have some answers that tell me A. Okay, very good. Yes. So the break even is always around or at the entry, where your entry is. Okay, so this is the break even. Okay, I would place my stop loss maybe here. Okay, let me just set up the trade, then I can explain further. So for example, I'm looking for price to do this. Okay. Okay. So for example, change the color to green. Okay, so I am bullish. For example, I'm bullish on my Euro USD. Okay. And then I have my buy entry right here. So when price came here, okay, when price come here, so for example, you have the entry, your entry is here, my entry is right here. For example, when it broke, right, and then I'm looking at this support. So when it broke, probably my entry is here. Okay, price move up, okay, in my favor. I'm very happy. Then came down, typical move. But when it comes here, most people will panic, right? Because this is the point where you do not know whether you should take profit or not, right? You do not know, hey, should I take profit? Should I close the position? Or should I just hold on and wait for the price to move this way? Okay. So there is a couple of actions that might happen here. One, I take profit. Correct? Right here, I already probably gain a couple of pips. I just want to take my money and go in case the price actually come back and touch my stop loss. Correct? So I could actually take profit. Number two, I can wait or hope that price will come back up and leave everything else as per usual. Right? I will still place my stop loss here. I'll still leave everything as it is. Okay. So what would you do? Will you take the profit and close the position? Or would you wait and hope that, you know, price should go in the direction you have analyzed for so long for this entry? Yeah, most of us would actually wait because we have spent so much time entering and analyzing a trade that that we want our trade to be correct. So most of us will wait instead of take profit or close the position. But have you guys ever thought that you can move your stop loss from here to here, so you will not lose any money, or, you know, in case price actually flies back down from here to here? Okay, so the two stop losses that I have shown is, one is here, your previous stop loss. This is the second stop loss. Okay, so from here, imagine the price already came here. If you are so afraid that you might lose, or you are, you know, human instincts are naturally, we do not want to lose the money or our idea. So if you do not know how to move it, this is how you actually do it. Okay, so you have a peace of mind, correct? From here, you move to here. So in case you can move up slightly a little bit for those who still want to take that small 1 pip or a 0.5 pip of profit, but usually we'll just put it at the entry level. Okay, so this is one way that you can manage your trade as well. So move your stop loss if you do not want to close the position, correct? Because you don't want to lose your idea. You don't want to lose the idea, or you don't want to lose in monetary sense, correct? So move your stop loss up. Okay, for those who haven't tried or who do not know. Okay. Another way is you can take partial profit as well. Okay, but some people, they do not like to take partial profit. It's all or nothing, right? I mean, it's logical because you have already calculated your risk to reward. You have done all your risk management. You feel like there should not be any partial profits to be taken. I understand that, but there's no harm trying, okay, to take partial profit. So for example, when my price actually came up here from this level, when your price actually moved from here to, okay, usually there will be a take profit. Okay, so for example, if your take profit was to be here, okay, and price, let me adjust. Okay, so price is here now, for example. Okay, I'll just leave it there. Okay, so price is actually moving in favorable, okay, to what you are looking at. Okay, now, so if you're waiting, okay, for your trade, waiting and waiting, shit, what happens here? It's coming downward, and then you see like, hey, it's telling me that, you know, it might actually reverse from here. You're worried, and you wait again, and there's a big candle that is coming down, and you're worried. And this candle actually shows that, you know, there is a big or a heavy, strong sell pressure. What will you do? Would you wait? Or would you take partial profit? Okay, I have some answers. Okay, I have different answers, both of which are okay because different traders have different ways of trading. So, and you see this, obviously, if it's me, I will panic as well. Okay, so you can actually take partial profit off here, or you could actually move your stop loss even. Yeah, I think you can take partial profit off here. Okay, depending on what the market is actually telling you, right? There is also trailing profits to be taken, but that won't be covered in this series. So we will stick to partial profit first. So you can take off partial profit if you feel like, hey, maybe I should just take the 60% instead of having to lose my 100%, correct? So there are two ways that you can see this. Is number one, you can take the 60%, all right? Or number two, you can just move your stop loss right here. So instead of taking 60%, you want to wait, hit exactly to your 100%, okay? While not hitting your stop loss. Okay, so two ways. You can either take partial profit or you can move your stop loss to the break-even point. So both kind of works the same way, right? It's depending on what trading style you have. Are you the type that you want to take a full profit because you think that your levels are very accurate? Right? Because by moving your break-even up here, it means that you kind of want to wait for the full 100%, correct? Instead of taking a 60%. So it's depending on what idea or what kind of trader you are. You can take partial profit or you can move up your break-even point, right? Or your stop loss. Okay, you can even move your break-even further. Okay, so maybe at this point in time, for example, okay, we will use another chart. If you have any requests, let me know. We can analyze as well. Okay, let's take a look at, okay, this one, it might be, this is a double top. Looks juicy. Okay, let's take a look at this. Okay, for example, so this was a trade that I was looking at, right? There's kind of a squeeze here, which I'm a bit uncertain. So it might just do this, right? Before a fly, which I'm hoping for, or it might just pull back down. Depends on whether there are any fundamental news as well. So right here, take profit. Let's do this. Okay, I am looking at a buy here. Buy here. Take profit here. Okay, stop loss here. Now, maybe I'll move to 1 hour. Maybe longer. Yeah. Okay. Can you guys let me know where would my break-even point be given this scenario? Where would my break-even point be? Would it be at here, A, B, C? Where would my break-even point be? Okay, remember your break-even point is always, this is C, right? Sorry, I kind of forgot because I didn't indicate. Okay, so usually your break-even point tend to be at your buy entry. Okay. For Emerson, is there a reason why you said slightly above C? Is it why is it slightly above C? Okay, so always remember your break even is always okay. Always remember that your break even point is always around your buy entry or sell entry, correct? Because that is where there is no loss or making of any money. So break even means zero. Okay. So if my buy entry is here, for example, and then price actually came up here. Okay, number one, if you want to do a partial take profit, you can, because you do not want to go through the emotional roller coaster, right? Or you feel like, hey, there is a market news that is coming up. Okay, these are all the small factors that might affect your trade decisions, right? Because right now, I feel like, hey, USD yen might actually rise all above to my take profit or even beyond. But there might be news that, US have come up with some regulations or whatever that is affecting my yen. That small fundamental news or announcement might actually affect price movements. So always listen and always understand what the market is feeding you. All the information are as important. These are the small factors that might affect you or the price action. So when prices come up here, you can actually take partial profit, or alternatively, you can move your break-even point or your stop loss. Okay, up. Okay, so you can move. So there are a couple of methods. Yeah, yes, it's correct. It's spread, Emerson, correct. So you can actually move your break-even point further up. Okay, so you are still in profit, or you can take a partial profit. Okay, so there are a couple of methods that you can use for people who want to take the full profit, who wants to take the full PP, the 100%. Yes, you can actually bring your break-even point up or move your stop loss up. Okay, for those who do still want to take some profits home, do not be afraid or do not be embarrassed to do so, because it's all depending on your trading style or trading methods. So taking profit is extremely good as well. Okay, so imagine your prices came all the way here, taking a 60% is also good. Okay. Okay. So let me know if you have any requests or any question. Hi Gwen. Hi Gwyn. Okay, you're quite late to the session. If you have missed the front portion of today's webinar on trade management, feel free to log on to our IronFX page and download the recorded webinar series to watch, right? Okay, because we are almost coming to the end of the session. Okay, so let me know if you have any requests before I end today's session. It's a relatively short and easy topic to understand, right? So it's just about the anatomy of trade, how you can move your break-even points. What is a break-even? Your break-even placement, your partial profit, and your partial profit placement. So these are relatively easy to understand fundamentals, but it's about applying it. You can have this knowledge and idea, but if you want it to be useful, you have to apply it, be it on a demo or on your real life account. You go ahead and try it. It might be useful, right? Especially you're moving your your break-even points. Okay, because most often humans are greedy and we always want to validate our trades, right? When we enter a trade, we always want our trade to be correct. Okay. Yes, Henny. Yeah, partial profit is better than hitting a stop loss. Definitely. Nobody likes to hit a stop loss. Everybody wants to be correct when you enter a position, right? Thank you, Elvis. Yeah, so when we enter a position, most of the traders, we always want our trade to be correct and validated. We do not want it to be we do not want it to go to our break even, or we do not want to go to stop loss. Okay, this is a mental barrier, I would say, okay, for the break even part, because you always want to be correct. So you do not want to break even, correct? That is logical, but break even is a very useful trading risk management tool itself. Okay, so please try it. Okay, overcome the idea of break even. Okay, break even is not losing. Okay, it's just telling you that, hey, you know, maybe this trade don't work out, but you do not lose anything. Instead of being stubborn and having this mental barrier for price to go to your stop loss, you know. So try moving your break even or your stop losses, or try to even take partial profits. Okay, sometimes my R to R is 1-to-1, but when the market moves, you know, the emotions are there, so I will tend to take partial profit, which is not wrong, because if let's say I have 10 trades and 8 trades I take partial profit, I'm still very profitable as a trader, right? Given if you have 10 trades and you only take 2 full trades, right, and 8 loss, I think I'm a better trader than you. Okay, so taking partial profit is not wrong. If you have a high win rate or high take partial profit rate, it's still very good. Okay, in the long run, if your R to R is maybe your R to R is 1-to-2, but if you take partial profit at 1:1, it's actually extremely you are extremely good trader. Okay. Okay, so I have come to the end of today's session. I hope I have imparted you some of the knowledge that I have about trade management, taking partial profit and break-even points. Okay, don't hesitate to try it, because once you try it, maybe you will like the method or the strategy itself. Okay. Yep, I will see you in the next session on let me see, what is it? I think I trade invalidation. Okay, it's about the mental, it's a psychological thing, and we also have our partial stop loss, trailing stop loss, okay, that we're going to talk about in the next part 3 of 4 and 4 of 4 for trade management. Okay, so thank you guys for tuning in. I will see you guys next session. Bye.
Hello everyone, my name is Emily and welcome to another video. Today we're going to talk about automated trading systems. Automated trading systems, also referred to as algorithm trading, involves the use of an algorithm to execute trades according to the predetermined criteria. The systems allow traders to establish specific rules for both trade entries and exits. Once these are programmed, they can be automatically executed by a computer. The benefits of automated trading include more trading uptime, minimizing the impact of emotions during the trading process, and faster execution. To get started with automated trading systems, you need to decide whether you want to build your own system or use a third-party algorithm. If you build your own system, you can choose every aspect of the strategy and have a better understanding of how the system works. It could open and close trades based on timing or price using technical indicators to confirm your entry and exit points. For example, you could build a system to automatically buy 100 Netflix shares when its 50-day moving average goes above the 200-day average. Or you can automatically sell 100 Netflix shares if the market reaches volatility levels you are not happy with. If you are not confident enough to build your own system, you can use a third-party solution instead. This works in a similar way to a self-built system, opening and closing trades according to set criteria. However, you will have less control over the customization of these parameters. Whether you build your own automated system or use one which has been pre-built, it's important to backtest it thoroughly to make sure it works in the way you want before you put it to work on the live markets. MT4 is popular if you want a third-party solution because MT4 provides a marketplace where you can conveniently access pre-built algorithms to get started with automated trading. It's important to note, though, that automated trading systems have some downfalls that you should be aware of, like the possibility of mechanical failures. For instance, if an internet connection is lost, an order might not be sent to the market. Automated trading systems need to be monitored because of the potential for technology failures, such as connectivity issues, power losses, or computer crashes. Automated trading system can experience anomalies which could result in wrong orders, missing orders, or duplicate orders. If the system is monitored, then situations like this can be identified and resolved quickly. Thank you so much for watching us today, guys. Bye-bye.